Alright, so guys, what is up? Today I'm going to teach you about SMTs, what they are, how to use them, and how beneficial they are in trading and how I use them every single day. So now, what is an SMT? An SMT is a divergence in two correlating pairs. So my example today is ES and NQ, SPX and NASDAQ. They work together and their prices are very similar at certain times. So for example, we will show you what a bearish SMT looks like. There's two kinds of SMTs. You have a bullish SMT and a bearish SMT, and I will show you two examples of both today, or one example of each today. So for the drawing, as you see, we have ES. We have come up, higher high, higher low, higher high, higher low, higher high. We break through this high right here, then we sell off. Okay, now on NQ, what can you look at the difference here? Higher high, higher low, higher high, higher low, lower high, lower low sell-off. So if we were looking at this, this would be our liquidity level. As you see, is the second peak of these lines. So 1 point, 2 point, 1 point, 2 point. Now the third point takes out the second point on ES, but the third point does not take out the second point on NQ. So this is where your divergence would come. So this is when you take your line and you draw SMT. This is a clear difference in price movement and the way orders are coming in. Clearly, it looks like ES is taking the liquidity, because this is the liquidity area up here, and then selling off. But NQ never comes up to that area. So that is an SMT. And now I will show you an example of a bearish and a bullish. First, I'll show you a bullish, which is the opposite. So this is the live chart right now I have marked out. So we'll get rid of the SMT. Whoops, right there. So I have ES and NQ right next to each other right here, or NASDAQ and thing. So if we look at the time zone, if you look at the bottom of the screen, Thursday the 11th, July, the year 24, 8 o'clock. So this high right here was made at 8 o'clock on July 11th. Let's go to ES and look at it. They're both on the 4-hour chart. You have to link the charts together. Okay, so now we go to Thursday. Look at the bottom of the screen. Thursday the 11th, July 24. Why is it? I'm on the wrong chart here. Okay, there we go. This will make it better. Sorry about that, guys. Right here. So Thursday, July 24 at 6. Sorry, it is not 8, it is 6. It is 6. Look at this. The high is made at the 6 a.m. mark. You go to ES, the high is made at the 6 a.m. So these two highs are very correlated and they're the same. So let's mark them out, okay? Look, we attach our line. Clearly, we have our buy side level up here. We attach our line on ES. We clearly have our buy side line right here. Now, do you agree that they both have highs? I'm on a 4-hour chart for both. So now we can see that ES came up and took this high, aka swept this liquidity, filled these orders, things like that. Okay, let's see if the NASDAQ has. No, the NASDAQ is way different. The NASDAQ is approximately 270 points away from taking this high. So what do we do now? We take our tracement tool and we mark the high to where it was not taken at, like that, SMT, divergence. Now we go on ES and do the same thing. Essentially, all an SMT is you mark out, say you had your levels of liquidity marked out, and they should be the same on NASDAQ and SPX or whatever the two correlating pairs are that correlate together. Now, all an SMT is one pair takes the liquidity and the other doesn't. On this example, there's still liquidity resting up here. NASDAQ didn't take the liquidity. SPX took the liquidity. So essentially, SPX had a liquidity sweep, but NASDAQ didn't have a liquidity sweep. Now you would have to pair this with a few other things to validate the SMT that it's going to hold, because there is a time when SMTs won't hold. Now if the draw on liquidity is 100% higher, most likely this SMT won't hold and the NASDAQ will come up and sweep this liquidity and price will keep running up. But it's looking like the way that NASDAQ had a big market structure shift on the 4-hour and it's inside this imbalance and it's at premium, it looks like this SMT is going to hold. I would say this is a valid bearish SMT. So now let's go down to the hourly and look at a bullish SMT, because that was a bearish SMT. Right here. Okay, so let me pull. Let me find it. It was right. These those right here. Wow, there. Okay, it's up here. I don't know why. That's just my model. Okay, sorry. But so let's look at this level right here. Let's zoom in. Okay, so once again we have clear lows right here at what time? 10 o'clock on Thursday the 4th. We go over here, we have the same lows, Thursday 10 o'clock the 4th. So let's mark it out, sell side level, sell side level. Now, what is the difference? I mean, just look at the picture. I will draw it out for you guys, but NASDAQ has come down and taken this level, went under it, and then riled up. Now, this will kind of show you how SMTs work together and why. I'll explain to you why this SMT was a bullish SMT and it was more on SPX, and why now that bearish SMT is more on NAS. So, let's mark it out. That's a huge SMT. Okay. So we have our SMT marked out. Now, to show you how okay, hypothetically, say this wasn't here, and say price looked like this. Price was chop, 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 and then it's following NASDAQ, and it comes down here like that. And this would look similar to the NASDAQ price. Now, there would be no SMT because they both swept the same level. They each have the same liquidity pools at the bottom, but only one of the pairs went into the pool. So, for example, NASDAQ was the one that went into the pool here. Now, I'm going to try to explain something to you. It might be hard to understand. But okay, so we have two key SMTs marked out right now in price. These are live charts. So the first SMT was on ES because it is a liquidity sweep on NASDAQ, liquidity sweep right here, no liquidity taken right here. Now, doesn't it just make more sense that this next SMT is going to be on the NASDAQ? Because look how much higher price is on ES or SPX when NASDAQ is taking these lows. There's a huge gap in price. So it only makes sense that that ES or SPX is gonna be able to get to these highs faster. The reason is because it didn't have to come down all this way. Say you're running a race with your friend and you start at this wall, right? You say you start where? We'll say we start here, right? This is you. You only have to go right here, and then you get to go to the top. But your friend, you guys start at the same exact spot, but your friend has to go touch the wall, then go up here. Whoops. Looking at this right here, you tell me who's going to get to the wall first. The person who had to touch this wall right here, or the person who had to touch this wall down here? I think it's an obvious answer. The person who had to run farther is not going to touch the wall as fast as the person that didn't have a shorter distance. That might make it easier for you guys. Just think of it, you can like relate trading to so many different things in life. And this is the easiest way for me to explain it to someone that might understand it is NASDAQ didn't have to swim to the bottom of the pool, or that's even a better way to put it. Put it as like, this is the bottom of the pool. NASDAQ is Timmy. Timmy had to swim to the bottom of the pool, then the top of the pool. ES is Elliot, and Elliot only had to swim halfway down, then back up. And they started at the same time, and obviously that Timmy has to go all the way down, so he's not going to be able to get up as fast as, what's his name, Elliot. And it's the same way on the other side. They work off of each other. They constantly rebalance price. So now, Elliot got to the top of the pool faster than Timmy. Or yeah. So that's kind of how price and SMTs work. And you can identify them on any time frame, and we can probably, it might take me a second, but we can go down and look at some. The other day there was a bunch. What day was that? Thursday, I think. Let's see. Let's not even talk about it. Maybe right here. Right here. Before this big sell-off, there was a lot of SMTs. And I lost the trade, but it happens. They're way easier to identify when you have this, I have this trading view thing where I can put the two charts right next to each other. What was the poem? Let's see, let's mark this out. I think we wicked that. Yeah, right here. So this is our sell side liquidity level. Obviously, it is the swing low. So we have the same swing low right here. They're at the exact same time. I'll prove it to you guys right here. 2110, 2110. both on the 5-minute chart. Now, at 8:20, SPX took this level. Where is NAS at 8:20? At 8:20, NAS is all the way up here. So what is that? It's an SMT. It's a bullish SMT, and this is the last one. But after this SMT is formed, look where price goes. Price runs straight to buy side, straight to the highs. There was news, but the market is algorithm. So now, how do you use SMTs in trading? Now, an SMT isn't something that it is more of a pattern. It's like a stat pattern. So it's not going to be your main thing for buys. It's not going to be your main thing for drawing liquidity or things like that. It is just going to say you need to already have a draw on liquidity. And then the SMT behind that is what really stacks that conviction on why you think price is going to go down. So like having this big bearish SMT doesn't mean that price will 100% go down. I need to see a couple more things. The couple more things would be that price is in a 4-hour imbalance, a bearish imbalance. So we have a bearish SMT, bearish 4-hour imbalance, bearish market and structure shift. I think price is probably going to go touch these lows right here. So you kind of have to stack things on top of each other to make it valid. But that is what I have for you guys today. That is how you use SMTs. That is what an SMT is, and how I use them in trading and how you can use them in trading. If you like this video, please subscribe. If you guys have any more questions on like certain trading confluence or something like that, I would love to explain them to you. Thank you guys so much for the support.